Is ETF a better investment for beginners compared to unit trusts?
To start learning about the world of investment, actually ETF is a very good tool to learn about it. After you've gained that knowledge and then you decide, actually I don't want to learn about investment so much, I would rather hand it off to my consultant or financial planner.
I want to dispute what he said. For someone who's really blurred totally, it's good to come in with unit trust and then progress to ETF.
The unit trust industry on its own is, for lack of a better word, is a sunset industry.
Hey guys, welcome back to another episode on Mr. Money TV, and today we have a special session, and as you can see here, we have some guests with us, and we are going to settle this debate that's always been there in the financial planning circle. Is unit trust better or ETF better, especially for beginners? Now, at the end of this episode, what we want to do is to help you make a better decision for yourself. We got some special guests here with us. Starting from the right, we have Yishan from No Manila. Then we have Albert here, who is in the financial industry. And then we have Lynette, who is a veteran in the financial planning industry as well. Then we have Mr. Stingy, Aaron, who runs a famous blog as well. So, are you guys ready?
Yes, sir.
Yes.
Okay. I'm going to be asking you guys questions, and you guys will be raising up the boards to state whether you agree or disagree with the statement. Question number 1. Is ETF a better investment for beginners compared to unit trusts?
Three against one.
Three against one. Now, Lynette, maybe you can share with us why did you put disagree?
Okay, first and foremost, to be honest, my foray into the financial planning industry started with unit trust. And in unit trust, there was no ETF. ETF was only introduced in the year 2002, whereas unit trust has been longer than that. And I just want to throw a spanner into the wheel by saying that at that time they had index-linked fund, which was launched in 2000, I think Principal Asset Management. Then in 2002, Maybank also launched theirs. Today, Maybank has closed theirs in 2019 due to performance, but Principal one's still running. And I sold a lot of those. I felt that unit trust was something that was easier for beginners, especially if you have no knowledge about investment. If you have been trading, then that's fine. I think ETF would be much easier. But if you are starting and you have no time, no bandwidth for numbers and tracking, because ETF you need to do your own monitoring and research, then I would say that unit trust will be better. You may pay higher fees, but you get the right people to manage for you.
I do actually somewhat agree to Lynette to a certain extent that with the idea, if someone is totally new and have no knowledge at all and doesn't want to pursue such knowledge in the investing and financial industry, financial aspect, then unit trust is a great option because it's a totally hands-off approach. But I will also argue that because ETF or exchange traded fund is designed in such a way to understand it is not as difficult as it used to be anymore, or at least what people are afraid of. That's why I would say the barrier of entry to understand ETF as a whole, it's not difficult. So if you are willing to put a little bit of time to search on Google or even ChatGPT, I think you have enough knowledge on what you are doing as an ETF investor. That's why, and hence my answer just now. But to Lina is not wrong, because if people really do not bother about all this, then unit trust is a great tool. Yeah.
So what you're saying is that you feel that if, let's say, the person doesn't want to spend time at all to understand it, then maybe unit trust will be a better choice. But if the person is willing to spend a little bit of time, then ETF could be a better choice.
Yeah, so it's essentially caters to a different type of people.
Category
well.
of investors.
I see. Anyone got other opinion?
Yeah, I'll hop onto what Yishan just mentioned there. I think maybe two ways to really look at it, right? Like, I agree that if you are the kind that does not have time or maybe do not want to be bothered at all by doing your homework, right? Then yes, unit trust. Maybe there's a bit more true back in the days, but I guess with now new platforms coming up, then you have a few more of these digital platforms coming out that uses ETFs to build portfolios, and that really kind of addresses that problem where, okay, I don't know what to invest, but this digital platform can build a portfolio using those ETFs for you based on certain questions that they may ask during your risk profiling stage. So that's one way that they are able to help. I think there's also a few other aspects to kind of really look at it too. Typically, if you're a beginner, you're new to investing, your minimum investment amounts into unit trust funds on average can be about, they require you to put in 1,000 ringgit. Digital platforms today, they have lowered the barriers to entry for investing. I think you can even start as low as 50 ringgit or even lower for some platforms. So I think if you look at unit trust funds, on average, yes, there's that 1,000 cap, and it's actually going lower and lower. So that's great. But just purely comparing them to digital platforms, I think digital platforms allow beginners to really start with a really small amount. And I think that's very important to at least get people one step through the door to start investing first class.
All right.
Yeah, if I can just add to what Yixuan said also, he said that it's a choice, right? It may cater for slightly different markets. So unit trust may cater for a slightly different market. ETF may cater for a slightly different market. But I think as a beginner, because you mentioned for beginner, right? I think actually ETF is quite to start learning about the world of investment. Actually, ETF is a very, very good tool to learn about it, especially with all the new platforms that are coming out. So I feel that actually pointed me to go positive for ETF being something for a beginner. I mean, after you've gained that knowledge and then you decide, actually, I don't want to learn about investment so much. I would rather hand it off to my consultant or financial planner and they buy unit trust for me, then that's a decision you can make later in life. But I think as a beginner, it's actually quite important to start learning about the fundamentals, and ETF I find is actually a very powerful way to start learning.
I want to dispute what he said.
Yes, I see.
Let's invite. Challenge.
In a sense, why? Because I have been dealing with clients since I stepped into unit trust consultancy, and majority of my clients, the men in the street, are not like us. For us, it's very easy because we study, we understand, and to us it's simple, we're making it simple for you. But you must understand that when you stand where the client is, what if you had somebody who is in sales and not technical at all, or even advertising, or even a housewife for that matter, they don't have that time to study. So your ETF, you need to monitor. You need to understand charts and all those. Yes, that's available. I totally agree. But when you have totally no time, you would rather pay for someone who is good at what they do to do it for you. I think the key question here is, are you having the right consultant?
Yep.
Do you go with an agent or do you go with a financial planner with a consultant's UTC, means registered with FIMM? I think that's important because the type of advice that you get would make a difference. And the way I see it from where I come from, it's good to start with a unit trust, but as you get better and understand investment better, you would hop into ETF. I'm not saying that ETF is bad. I totally agree because, hey, I was one of those who sell index-linked fund before ETF came along. I totally love it. So I would think that for someone who's really blurred totally, it's good to come in with unit trust and then progress to ETF. And if you can get somebody who can do both for you, and that's where financial planners comes in, who can build you a portfolio with different asset classes, go for it.
I'm not going to dispute what Lynette said. But I'm going to put a caveat there. What I said about learning about beginners, learning ETF and so on, not everyone has the same learning style.
Correct.
My learning style is I like to read. And actually, maybe in my experience when I was younger, when I speak to some of the agents that want to sell me unit trusts, and then I find that they just shoot from the top of their mouth, and then it's not factual. It's not if you read the website also, it's not actually reflecting of the website. So my style to learning is I want to read, I want to see a website, I want to see chart, right? But I recognize that may not be accurate for everyone. A lot of people want a little bit more guidance from a human. So I think like what Lynette said, if you can find a trusted human, hopefully a licensed financial planner to guide you through, that may also be a powerful way to get started.
Any more comments?
Nothing on
to
my
add
end.
on?
Yep.
Hey guys, I hope you're enjoying the debate so far, and for that, we gotta thank our sponsor for supporting us in creating this video. So here's a message from them. Huh? The fees so high Can make money or not? Oh, my profit also go back to fees already.
Aya, fees no matter lah. You just focus on the profit lah, you see? See this 10%. Aya, long term one, my right?
But what if the fee?
I'll divide. I'll divide. I'm sorry. I overcharged a little bit. I'll fix it. I promise. I'll fix it.
Okay, fantastic. Now, as we bring up the heat a little bit, the second question is this. Is the high fees incurred by unit trust justified?
Spicy questions.
Yeah, it's a spicy question.
This is a spicy one.
Wait, sorry.
I'm the liar.
Okay, now once again, you're liar.
Yeah.
So why not let's get you to state your case.
I'm speaking from experience because I know nuts about investment. All right. I have very bad experience personally because a family member lost a lot of money in stocks. And because of that, for the longest of time, I thought stocks was very risky. So later on, when I went to Unit Trust, I thought it was a safe haven. However, as I go on, then I realized that, hey, Unit Trust is also premised on stocks. But then I had somebody to help me. I had agents, and then there is also the fund managers. And then your assets are safeguarded by the trustees that holds the assets, so that if the company tanks, your fund is still alive. That was something which I felt. The fees that you pay, having said that, is justifiable, but looking at today's things are cheaper now in terms of, because automation, the fees should be revised and it should be competitive. But it will be higher than ETF is because all the hard work is done by the fund manager. So you pay for expertise, you should know how to ask for the right service to you, level of service. That's what I meant.
All right, since you said you agree, I think we shall invite Ishan.
But I think to proceed with this conversation, right, I think it's only fair for us to just explain to the audience that are new what are the expenses actually that is involved when you invest in unit trust or ETF. So for unit trust, right, the way I see it, there are two main category of expenses involved or costs. So number one is the expense ratio, which is on the fund level, which is what you are paying to the fund managers to manage your unit trust fund. And the second is a sales charge, which is charged by the unit trust agent or the unit platform that sells unit trust, right? So with this in mind, right, I will split it into two particular subsection for this conversation. Number one, expense ratio, which is paid to the fund manager. So it's a fund level expenses, right? We all know that typically unit trust has a higher expense ratio compared to ETF. So to give everyone a perspective, like S&P 500 ETF, like the VOO, has a 0.03% expense ratio. And in general, unit trust has about 1.8 to even 3% of expense ratio. So the question here is that, does the fund manager that actively manage your fund actually outperform ETF fund that you invest in? So does that justify? So for that, right, I actually did a little bit of research.
Did homework, eh? Did homework.
Yeah, so a quick one. So out of curiosity, I actually, the most famous ETF that we all know is the S&P 500 ETF, which tracks the performance of the top 500 listed company in the US, right? So this one particular ETF that tracks S&P 500 is called the VOO. So it has a 0.03% expense ratio. And the 5-year annualized return for VOO is 15.72%. So imagine like in average, it achieved about 15.7% in every year for VOO for S&P 500. So imagine, I'm curious, right? How about the unit trust fund that actually invests in the US, right? How did the best one perform? So out of curiosity, I actually looked out for research, right, in some of these unit trust platform. So apparently, the two best unit trust funds that invest in the US equity market, their 5-year annualized return is 12% and 13.68% respectively, which underperform the S&P 500. And what's worse, right, is that their expense ratio is 1.81 and 1.86%. In my opinion, does not justify on the fund level cost. And the second level discussion, and maybe we can talk about the sales. The second level of expenses here is what we call the sales charge, which is the cost that we pay to the agent, right? So, or the platform that sell unit trust. I would go ahead and say, right, it's totally not justifiable for us to pay a high sales charge to the platform that sell unit trust. And because they don't give you any advice or don't give you any value add to your investment journey. But for agent or unit trust agent or even financial planner, it's debatable. Because when you gotta ask yourself, right, when you are paying this sales charge for this kind of agent or financial planners, do they help you aside from the fund level performance, do they help you rearrange your portfolio in different market conditions? Do they have the wisdom to guide you through a market drawdown and so on? So if all this, right, is what the particular unit trust agent or financial planner can provide to you, then I think it's probably still justifiable. Yes. Yeah, but if the only thing that the agent do, you can't reach him or her when you need their service, or the only thing that they do is always just show off that they achieve their sales target and they get to go to holiday. Yeah, then I think for that regard, right, it's not justifiable. So the point I'm trying to say here in regards of the sales charge, right, is that the problem with the industry is that there's a large spectrum of quality of service that we are getting from unit trust people, agents or even financial planners. Some are good or some are terrible. So I'm not talking bad about unit trust agents, they are good ones, but the bad ones, there are a lot as well.
Yes.
So here,
agree.
this is a problem with the industry. That's why, and hence the answer to my initial reaction.
I think maybe just reinforcing again what Yisha has mentioned, right? There's two parts to it. One is the sales charge, one is the expense ratio or the management fee. The management fee essentially is a fee that goes to compensate the fund manager for his performance or his ability to outperform whatever benchmark that has been appointed for the fund itself. So you have provided us with the facts already that it's very hard or very difficult to beat the benchmark. Actually, my bigger qualm is actually with the sales charge side, because that is it's a fee that's imposed every time you go into a fund, switch into a new fund, and it's painful because on average, I think in Malaysia it can range between 3 to up to 5%, and that means from day one you're down already. You put in 100 ringgit, you start at 95. And then to make your way back to 100, you need to make a little bit more than 5%, like 5.2, 5.3%.
To cover the
so
charges.
That isn't explicitly shown when you go into the fund itself. You don't really see that you start on day one negative, down, because that portion goes to compensate whichever platform, bank, agent that sells that fund to you. Granted, yes, there might be, it really depends on, the sales charge value depends on what you get from whoever is selling it to you, but it doesn't mean that you will get very good service from that particular person that's selling to you, because they might just be selling it to you for the sake of selling it. So there's a bit of a moral hazard there. Whoever's selling to you, are you really getting what you
The service level.
the service level that you should be getting out of this.
I agree. I think I
Right.
mentioned that
And it's
earlier.
not for, I think in a lot of the cases, at least from personal experience, hearing, talking to people, they haven't been really getting that.
In fact, I have a friend, I actually managed to talk to a friend like 2 years ago when he reached out to me because I'm creating financial content on No Money Lah, right? So my friend reaches out to me and asked me about this Unit Trust and ETF thing. So he showed me the Unit Trust that his agent advised him to buy. And I see, right, I'm surprised. Every time he buys, right, there's like 4% sales charge. So every time he put 100 ringgit in, 4 ringgit is taken out. So I was like, this is ridiculous. You shouldn't be charged for this level of fees and service and in return. So yeah.
Maybe small hack lah.
I think there's something else we need to explore when you talk about service charge. Because when I was a Unit Trust consultant, I circumvent the service charge issue because it's not every sales that you put in actually attracts. Because if you do rebalancing and you do fund switching, it's free within the same organization. So if let's say the market is good and you want to take money off the table, you can actually switch to a bond fund, it's free. And later on, when from a bond fund, you switch back into a unit trust fund, it's also free. So as a beginner in investment, you need to ask this important question to your financial advisor or your tied agent, if it's an agent. Planner is not so much an issue because if they use certain platforms where they can do free switching, that's not an issue already. So you only, if you effectively, you actually pay first time when you put that sum of money in to invest. Then if you do rebalancing using switching, you have no issue. So it may work out to be about the same as ETF or maybe even less.
If the agent is doing his or her work.
By right,
Yep.
if you ask FIMM, that's what they are propagating to all their agents. They should do. So let's not talk about who is a good agent and who's a bad agent, because we are talking about the people who are listening to us. We want to tell them, please go and ask that question. If you're not getting, please change your agent.
The onus really boils down to you as
Yes.
the customer, right? You
Yes.
should be asking the right questions. But then
Yes.
again, you may not know what questions to ask, so that's the
Correct.
tricky part.
Correct.
Maybe I share my experience dealing with unit trust. So first of all, for clarity, I own both unit trusts. I own ETFs as well. So I have both. And why I put the neutral statement is that in my experience, I've only gained access to unit trusts via platforms or via my financial planner. So when I say via platform or financial planner, means I don't kena the 5% sales charge. I get a discounted rate, whether it's like 1% or I think it's 1%-ish lah. But via the platforms I use or via my financial planner. So when the first time we spoke about like fees, I didn't really think about, I kena the sales charge lah. So maybe the point is that if you want to use unit trust, there are also cheaper ways to get those access to those unit trusts. The principle of paying for a little bit more consultation, advice, financial advice, especially from a financial planner, I think that one is a principle I agree with. So, if your financial planner recommends you something that is a little bit more expensive, or you have to pay fees to engage that financial planner, I think that principle is sound. You have to pay for good advice. Sometimes in life, not everything is free, right? Sometimes you have to pay for it. But I will say that generally speaking, if we talk about like sales charges, like at 5%, it does sound like it's very steep lah. And I hope the industry could move towards like more and more affordable kind of sales charges.
It has, because I think people who take out the EPF to invest in unit trust, the fees is very low. It's lower than the one because they're approved list, and then the sales charge I cannot remember, but it's a lot less than.
I think if you do it on the EPF's
Platform.
iInvest platform,
Yes.
they have brought it down to
Yeah.
0.
Yeah.
So that's great.
Correct.
That's great.
Correct.
Which is something we really applaud them for getting it through.
Yeah.
So we can say that generally when it comes to the justifying part, the mainly thing is there's a part of the moral hazard place where are you going to meet a good agent that is going to be transparent, going to be honest, and is good in his service provide. And on the other hand, if we are talking about performance-wise, on the fund level side, it comes down to whether the fund is able to perform above the benchmark, right? I believe if you search long and hard enough, there probably are some that outperform as well, right? Then the question is, can you find them, or does your advisor recommend them? Now, maybe just a very quick one. If there's one tip in your mind, because I believe all of you here all have both unit trust as an investment and also have ETF as an investment. Maybe just one quick tip. If you're to see a planner, what's the first question you ask this person?
This personal opinion I would ask the question like, are you open to recommending me the best fund based on my needs and not just from one single company?
Oh, yeah.
In other words, I want that person to be willing to, I'm not just tied to X company, Y company, I'm willing to recommend you anything that's best for me. That's my question.
Right, great one, great one.
Mine is similar to yours. I would kind of shorten it to say, as crude as it sounds, it'd be, what are your incentives? What are you here? Are you trying to sell me a product, or are you trying to help me achieve what I want to achieve in my life financially?
I will also add to what Aaron and Albert mentioned is that aside from being able to be neutral and offer different unit trusts from different companies, I would also prefer that if the unit trust agent, if it's agent or financial planner, also have some form of history or experience helping their client achieve their goals. As an example, if I'm in my late 20s or 30s, I have time for capital growth. So I want the agent or financial planner that serves me, shows me that he or she has a particular experience in a way that help their client achieve this amount of growth in the past few years.
Goal-based investment.
At least a track record, so to say. And if I'm doing this for maybe my retired parents, I want this particular agent or planner to have the experience where when the market drops in a drawdown, they are able to help their client structure a portfolio that reduces a drawdown when compared to the benchmark or the market.
Actually, there's a process for it. That's why it's not like you put there long-term, no. When you put into the investment, your unit trust consultant is not a reminder, so please don't call every day. But their job is to actually monitor, filter out the noise, and then advise you when it's time for you to rebalance your portfolio, regardless of whether it's ETF or unit trust. And I think this is the job of a tied agent. The only plus point when you use a financial planner is when you have goals, specific goals, and you have different goals with different time horizon, then you would have different combination of portfolio. So that is where the financial planner would come in. Yeah. But that is actually the consultant's job as well. Because I used to train unit trust consultants.
Right. Just one more follow-up to that as well, since the fact that you mentioned what you mentioned just now. Like when you say that you want to see an advisor who actually have a track record of doing something, I also noticed that generally when many people engage an agent, they actually don't really know what's the track record. And very often we don't even know whether that particular advisor, whether it's a planner, whether it's a unit trust agent, doesn't matter, they themselves invest or not.
That's an important question to ask.
Right?
That's an important question to ask.
So then the question is that if they don't invest, what's there to show you?
They have skin in the game.
Yeah.
Yes.
So this is one of the things that I just want to ask you guys. What are your thoughts? Will you actually go and ask your advisor and say, hey, since you asked me invest in that particular fund, right? Whether is it this ETF, whether is it this thing, can you show me that you also got put money there? Maybe not the amount but you'll put as long as you can vouch for it
Yeah, your skin in the game
I think psychologically that is reassuring. If
it does.
the person that is recommending whatever fund is investing also in it, but maybe if you try to think it more from an objective perspective, right?
Yeah.
Whatever is right for you may not be right for him.
That's true as well.
I agree. I totally agree.
So, but I do understand that your natural tendency to get him to invest first. So, there must be a reason why he's in it. Then, okay, fine, he's in it. I should go in it. Then we all feel together. But obviously, objectively, maybe it's not.
But I will also add on, if in the scenario where the agent or the planner is recommending you a unit trust to my parents, I want to see him do, doing the same, investing in the same unit trust on behalf of his or her parents. That will be even more reassuring.
I resonate with all of you
Yeah.
because actually during my time as a unit trust consultant and especially when the market tanks and everybody's panicking, this is where I actually handhold my clients and I think they find reassurance when they ask me, or rather they find assurance when I tell them that I'm still there, I'm not going to cash out because I find that this is noise and this is not the right time to cash out. And they say, oh, if you're still in there, skin in the game, yeah, we will hang on. But I want to also say something as well because we're talking about ability to take risk and all that. Majority of people, when I did a risk profile, 80% of them are actually moderate investors. They don't know what they don't know because at the end of the day, when the market goes up, everybody can take risk. When the market tanks, everybody is risk adverse. And they always want to give you money when the market is going up to put into whatever fund that the fund that makes them the most money.
Even when you tell them don't put in, also they will insist on putting in.
And that's the wrong thing to do.
Yes.
You must buy when the market is low.
And don't follow my portfolio. Very high risk.
Hey, but it's okay. What Albert says is very true because I have clients who are high risk, and when I actually put in the investment, I have to detach my feelings because I was a moderately aggressive investor at that time, so I can't do what I do for him using my portfolio.
Yeah.
I had to do based on his portfolio.
Right. So now let's move on to the third question. Does an ETF consistently outperform unit trust, especially after fee? Ooh.
Oh yeah, everyone agrees.
First time everyone
Yeah.
agrees.
Unanimous.
So you're sure you all listen correctly, right?
Apple to apple comparison, right? ETF versus a unit trust that's investing in exactly the same thing that the ETF is. Apple to
Okay.
apple. Then,
Maybe you
right?
wanna explain what that means.
I mean, like what Yixuan mentioned earlier, right? If you're comparing a US S&P 500 ETF, which is investing in the top 500 stocks of the US stock market, ETF, versus a unit trust that's investing in the top 500 of the US market, that's an apple-to-apple comparison lah. But if you're comparing, say, S&P 500 ETF versus a tech unit trust investing in technology stocks, it's not exactly the same thing. So you cannot, it's not a fair comparison if you compare it that way. So I think all of us, when we raise green, what we are saying is, if it's exactly the same thing, then of course the ETF will be cheaper than a unit trust.
All things being
Structurally,
structurally.
it's already, ETFs already have an advantage from a
Yes.
fee perspective.
fee-based. Yeah.
I will also advise audiences that's watching to expand beyond this perspective, not just compare on the fund versus fund level, especially if you are considering unit trust, right? You really need your unit trust agent or planner to have the ability and experience to advise you to rebalance your portfolio, or maybe depending on the market condition to switch your portfolio a little bit and so on. So that is the value add of a unit trust agent. So the way I see it is not so much on the fund to fund level performance, but more on the perspective that when you buy an ETF, you are investing in the product. Essentially, it's a fund. But when you're using unit trust agent or buying unit trust, you are buying into a service on top of the fund. So you cannot just compare like, okay, this ETF performs better than this unit trust, given that they are same thing. But you also need to consider that if a unit trust agent is able to provide you better advice in different market conditions. Let's say, and when the S&P 500 goes down, he or she has a foresight to tell you, okay, it's time to switch your portfolio to maybe some other asset classes. Then that I consider is a viable choice to get a unit trust agent if and only if this person can have the ability to do that. But I will also argue that it's very difficult, and I will say out of 10, maybe just 1 or 2 have the ability to do so. And if your capital is small, he or she wouldn't even give a damn about it. So yeah.
Spicing it up.
Spicing it up. Yeah. Any other comment?
Can I add on?
Yeah, sure.
Okay. So I did do a little bit of research, and generally I'm going to go local and global. Locally, if you compare the performance of local ETFs versus unit trust, ETF has outperformed. The same goes with global as well. But also, I would also like to then dial back into the man in the street. Through the years of experience in terms of unit trust as well as financial planning, I realized people are firstly concerned about losing money first. If they don't lose money, they're very happy. Then the next thing they want is to look at making money to outperform bank rates, outperform EPF. And for those who are higher risk, they will want to get better returns also. So in a way, that's why initially I put this one for unit trust is because if you look at the investor bandwidth, a lot of them are in that mid bandwidth. A lot of them think that they want to make a lot of money, but actually they cannot take that kind of risk. So if you cannot take the kind of risk, and this is my experience, when the market goes down, they're the first to vomit and cry. Cry father and mother. So to give them that level of comfort, I think for them to go up to the ETF, it's good to move them, let them go at the experience first. And then once they are more familiar with investment and what should be done, we can always bring them up and then maybe move into stocks as well. So I think there's no bad product. It's just which one is more suitable for you at which stage in your life.
Then I agree. I think there's no bad product. Like there's only right product at different stage. But I think there's bad service.
Yes.
I think the spectrum of service in the industry
Integral.
it's the same thing between unit trust agent and insurance agent. This needs to change.
I used to have downlines who has resigned. I can't handle their clients, not because I don't want to, but because my unit trust consultants are different character from me. So the type of clientele is different, wavelength is different, psychology. So because of that, that's why I do realize why there's a lot of orphan clients, and most of these clients, when I go and see them, I get scolded first.
Because you can't connect with them.
Because people's mistake. But I take the hit for it because I understand the psychology, because money is their hard-earned money. But once you stabilize the emotions, like what you say, then we can move them on to the next thing. And they turn out to be my best clients.
When I was like maybe 10 years younger, to me it's all about dollars and cents performance. Who can give cheaper, who can perform better? I'm going to do it right. But I think as I grow older, I realized that actually a lot of people, apart from the product itself, like what Yushan mentioned, they actually want someone to talk to. It's not just about purely the dollars and cents. I need someone to be able to talk to, and actually that's where a lot of value that financial planners bring.
Yeah, I think you said earlier that the investing is very human or emotionally can be heavy activity.
Unless the person is very technical.
But even then, it can also be emotionally tiring to go and listen to your very technical client. And
Actually, the easier. You just go in there, give them facts and figures, because I work with accountants. I ask accountants, I say, you know about numbers, why don't you handle it yourself? And they say they are too busy, number one. Number two, they say that they don't have the time. And also they say that because they are so focused on their profession, they don't have, they are unable to, the bandwidth.
As human, as we get busier and with more commitment, we tend to outsource things, and some people just tend to outsource the investment part of things.
And they appreciate because we throw them all the facts and figures. I can talk about technical terms and they understand. And it's just go in there, present the figures, present the facts, they make a decision, get out. They were the best clients also.
so maybe I'll just tune up a little bit on the technical side of things, right? I think one of the things that was brought up just now earlier was the fact that if you're comparing two same products, then definitely unit trust tend to underperform an ETF if, let's say, you're investing in, say, S&P 500, right? Now, so then this begs the other question, right? Does it mean that generally when you want to invest in the unit trust, your goal should not be to have a performance at benchmark level, but to have the alpha?
Let me preface that with the fact that investing can lose money.
Yes.
And if you consider investing in putting money in FD, that's safe. That's kind of different topic. But I think with any investment, you can lose money, and I think mentally you should be ready, have that mindset, right? You can't go into any investment and say, oh, I do not want to lose money. And if you don't want to do that, then
leave it in the bank.
Leave it in the bank, right? Then you have
Or leave it in the ETF.
Leave it in ETF. Then you leave it. You have inflation, which is another problem. Again, this might be where someone like a financial planner would be very helpful in helping their clients at least identify what is right, what is wrong for them.
Actually, most people, as long as they're getting good, consistent returns, which is roughly around the benchmark of what the funds are aiming for, I think that should be sufficient for most people. It's probably suitable for most people in terms of risk and return. And then if you are the kind of person that, I really want alpha, right? I really want to do the best and what? I would say that probably unit trust is not the right product for you. You should be, starting your own investment portfolio. You yourself buy.
Maybe trade
Maybe
yourself.
you trade yourself because you want that,
Mm.
I would say most people are probably not that. Although most people may think that
They think that they are like
but
that.
most people, I would say, are not like that.
When they
actually.
face the losses, they realize they are not like that.
Yeah.
For example, I think crypto investors. I think these 2 months, or this half a year, you will see many of them. I'm one of them, right? Making good money, right?
On the moon already.
Making good money. But what you don't see is the past 2 years where our portfolio was drawn down by 80%.
Yes.
And in this part of the 80%, can you manage the emotion and make good decision and don't run away or whatever not, right? Yeah, I think here is where also a financial planner comes in and really does help. Or either someone that you can speak to help you to get through that emotions. Now, let's move on to the fourth question here. We talked about unit trust agents, financial planners, and so on. But today in the market also we have robo-advisors, right? Who kind of seek to replace the function, at least the technical function of an agent or a planner. Do you think that sometimes, because unit trust agents or planners are human beings, their recommendations can be affected by commission or personal interest as compared to a robo-advisor? Ooh.
I want to say that human incentive you cannot escape because if you're incentivized to do something, it's highly likely that your behavior is going to be modified by it, right? This is why we have check and balances in the world, right? Whether it is parliament or in the courts or in a board of directors. But that being said, even a robot or robo, the programmer behind the algorithm, they are also subject to the same biases, right? Because maybe they are recommending something in the algorithm that is helpful towards a certain way. So a robo-advisor is also programmed by ultimately a human or a team. So yeah, it might be affected to some level also.
The more important question is, does the commission that he or she, unit trust agent or robo-advisor earn, do they in return give a better service to the particular investor? I think that's a more important question. If the goal is generate alpha to beat the market and they really do so for a fee, then I don't mind.
It's not a given, right? That the fact that you do pay whatever X amount, 3-5%, you will get whatever service that you expect to get.
I would like to say that if there is an agent who uses a AI or a system, a very structured system, to back their decision for their client, I think that would be a good agent to work with. As a human being, and when I was a fledgling unit trust consultant, I was many times tempted to actually sell unit trust with higher commission. But I didn't because it's about ethics and your principles. So if the integrity is in there, you will not do it no matter how tempted you are. And why I say it should be done is because at the end of the day, when you stand on the side of your client and they trust you, the business that they're going to bring to you is far more than that initial commission that you think you're going to make upfront. That is a given.
I have a question for you. Would you agree that there should be a body that for people to consumers actually complain if the particular agent is not performing?
There is, okay. So the process goes like this. First and foremost, they must complain back to the agent. If the agent or the planner, if the person don't get the kind of response, go to the company. Most of the time, the company will handle. But if still not, then they can make a complaint to SC, Securities Commission. You go to their platform, and then at the same time, if you seek redress, you can go to CDREC.
I see.
And it's no cost. It's no cost.
Yeah,
Don't pay
I just thought
money.
that there should be a way for agents to be penalized for not being providing the quality of service that is expected.
And then they can also complain to Federation of Investment Managers Malaysia, FIMM. So please remember all those. Those are the bodies you can go
Public
to.
service
Don't cry in
announcement.
silence.
I guess the whole idea here is that if it's a robo-advisor, while you may want to be asking what kind of algorithm goes in, but on the other hand, generally, whatever there's a promise upfront, you kind of get at least if they say that these are the things there because it's a computer system, so it kind of gives you what it's originally kind of promised. I mean, I'm not talking about promised performance, right? Now, on the other hand, but for a human side, there's a lot more trust involved in that case.
I think also, just to finish off, Gen Ys are very tech savvy, and I think they love the robo-advisors. In my financial planning, I'll tell them, you can go ahead and use the robo-advisors. You leave your life planning to me.
All right. Now, we're going to move on to the last question, question number 5. How would you personally balance between unit trust fund and ETF? Because all of you here invest in both assets. So how do you balance between these two?
Maybe I will start first because on the consumer point of view, right? Because I have both unit trust and ETF. But I would say the part where I rely on unit trust is on particular scheme by the government, like the PRS, private retirement scheme. There, I have no choice, I have to use unit trust. But do you guys know, does the audience know in other countries, right, like US or Canada, they have the choice to use the PRS equivalent to invest in ETF instead of just unit trust. So the point here is this: I think the way I balance it is government schemes like a PRS, then I either have to use unit trust, but for other things, I would usually go for ETF because of the fact that, as I mentioned from very early on, the barrier of entry to understand ETF is really not difficult. Like if you are willing to spend like 1 hour Google or ETF or ChatGPT the things that you want to know, you would be able to become fairly knowledgeable in ETF in that particular hour or 2 hours.
Yeah, I think with GPT now, maybe not even need 1 hour lah.
I would also argue that that's the way how I do it. But for other people, you might need the level of quality of service from a particular unit trust agent or planner. Then by all means go for it. So I would say it depends on what kind of a consumer or user are you. Do you want to outsource everything completely? Then yeah, you can ask yourself the question.
Yeah, hopping on to what Yishan mentioned, right? My belief is that it's not an either-or situation. It really depends on are you the kind that wants to be just leave it to someone else to manage, or do you want to spend a little bit more time to do your own due diligence and homework? If you know what you want to invest for the long term, you know what your time frame is, you know what your risk appetite is, right? I think if you're able to find whether it's a portfolio that's comprised of ETFs, if you can find someone that's able to help you achieve your goals, deliver that returns that will help you bring you closer to your financial objectives, right? Then go ahead. But also be sure that you know what you're getting into. Don't just go for the highest return without being aware of what's the risk.
Maybe I share personal experience, if that's okay. Right now, I outsource most of my investing decisions to my financial planner, licensed financial planner. So he recommends like a certain percentage into, say, ETF, a certain percentage into certain unit trusts. So I'm very happy to go along because actually the little time that I have for investing that I want to actively manage, I want to do it for crypto because I also like crypto. So I find that fun and enjoyable. So I'm going to spend my time on that.
Yeah, I totally agree with all of them. The thing here I would like to mention is that when most of the clients that come to us, they've already done some form of investment. So the only thing what we do is we do an evaluation for them. We review what they have, the existing portfolio, after doing the risk profile, and then we will show them what it should be the risk profile that they have. And then we will see whether it matches. And if it's not, we will help them to rebalance. I think this is the service that they probably want to look for. By right, the agent should be able to do it, but definitely the planner can do it. And all of this is based on different portfolios. Like for example, if you are retiring, if you are going for holidays, duration is different, children's education, you have different portfolios for different life goals.
All right, thank you very much. Now, before we move on to end this topic today, any last words for our audience in terms of unit trust versus ETF?
I think the most important thing for listeners and viewers is please know yourself better. As long as you know what you want, then the next thing you need to ask yourself, what are the questions that you want to ask of the person or the type of service that you are going to get. Whether you want to use robo-advisor, you want a real-life advisor, it all depends on you. Because if you are a tech-savvy person, you understand yourself very well, a robo-advisor is very good. But if you want someone to handhold you and walk you through life, then you will probably want to look for a financial planner. But if you think that you are good at financial planning, but you just want the person to serve you for a particular product, then you go for a tied agent.
What Lynette mentioned on a principle level is quite interesting. Because I think, again, if I rewind back maybe like 10 years ago, I thought there's only one way to invest. Actually, it's not one way to invest. It's many, many different approaches to it. Like, I like my approach. It gives me, it works well for me. I will encourage everyone to figure out the approach that works for themselves.
I guess repeating again what I mentioned earlier, right? Like when it comes to investing, like know what you're investing for, so that helps you set the time frame for what you're like. Let's just say you have 1, 3, 5, 10, 30 years. Going back to what we talked about earlier, I think everyone has their own way of doing things. I think especially those who are new to investing, you may not find what works for you right now. It's probably a journey. Maybe the key takeaway here is start investing today and don't just leave money in the bank. Especially for the younger ones, you have the ability to sweat your money harder, right? The time is on your side, especially when you're younger. At least wet your feet a little bit. Don't just stand on the sidelines and put your money in the bank.
The way I see it, right, I think if you are just starting to invest, I think try both. Try unit trust and try investing in ETF yourself. Do your own research and see from the unit trust point of view, do you get the level of service that you should be expecting? Like the advice during a market drawdown, what should you do? Should you balance your portfolio and so on? If you don't get such level of service, then you'll probably be able to make your own decision already. But at the same time, I would also say that the unit trust industry on its own is, if for lack of a better word, is a sunset industry. Okay, why I say this is because the days where people, unit trust agents just sell and just do nothing has ended. Like if they are still there, they will be phased out very, very soon. And the good ones are the ones that are always updated to market and are always able to advise their clients and so on. But the good ones, right, the very good one, if you are new, they likely won't be able to service you as well because they get paid based on commission and so on, right? So most likely they will deal with high net worth client. So for you who are new to the market, with just 100 or 200 ringgit per month to invest, for unit trust agent point of view, right, they have less incentive to serve you. So that's the problem, right? From the very start, I mentioned a level of the incentive structure and the spectrum of service in unit trust is a problem on its own. So try both and come to your own conclusion. See if my hypothesis or my perspective towards this particular unit trust industry is accurate or not. Then you make your own decision. Yeah.
All right. So thank you very much, everyone, for joining us on this episode. Now, after hearing opinions on both sides, what do you guys think? Do you think that ETF is better or unit trust is better? Why not tell us in the comment below? And if you like this episode, do hit the like and subscribe button and share it with your friends. We'll see you next week.